Hi everyone. Today let's talk about Amazon earnings, then we'll go over Intel, and then for earnings we'll finish up here with Caterpillar. Then we'll go over the economic calendar, then we'll go over the charts, then we'll look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Quick reminder, I do have a Patreon, and right now everything I'm posting on here is free and public. You can see some of the things that I'm posting in the mornings here. SPX divided by M2 detailed chart, stocks above their 200 SMA, potential predictions here. So definitely check out the Patreon. And I'm really trying to post on here every single morning. And if you want free notifications about my Patreon posts, you can always follow me on Twitter, where I do post links to my Patreon and each of my individual posts. Moving over to Amazon earnings, they crushed it. I keep saying that big tech is on a roll, cloud is on a roll, everything continues to go well here, and Amazon is no exception. They're up big after hours. You can see more than 7%. Earnings 31 cents, revenue 127 billion compared to 124 billion, so they beat by a lot. Amazon Web Services continues to do well. Advertising beat. Like I said, everything continues to go well for Amazon, and they are up huge. Moving over to Intel, quite the different story here. They had the largest quarterly loss in company history, but it was still better than expectations. Loss per share was only 4 cents, so not huge, and they were expected to lose 15 cents per share. So this company has done very well over its life. They haven't lost money on a quarterly basis pretty much ever. Revenue $11.7 billion compared to $11.04 billion, so they continue to do well. And Intel is currently investing a lot into new manufacturing facilities, so it does make sense why they are losing money, at least here in the short term. Semiconductors are also a cyclical business. That business is moving into a bit of a downturn here, but overall still pretty good here from Intel. Moving over to Caterpillar, just to get away from the tech sector in terms of earnings, this is a company that's still very strong and they are doing well. Earnings per share $4.91 out of $15.9 billion in sales, which was a huge beat compared to the $3.80 expected out of $15.1 billion in sales. So earnings per share beat massively. And that's also a huge step up from 1 year ago, where they earned $2.88 on $13.6 billion in sales. The big question here is, why is this company not up more? They beat massively, their margins are good, they're continuing to grow, but you can see here it was a lukewarm reaction and they put out good guidance. And the stock is still struggling when you compare it to the other big tech names that are jumping 10% on earnings. And they really highlight it here. So the economy is weighing heavy on the minds of investors. So even the fact that this company is doing very well, the question is, can they continue to do this well going forward despite their guidance? They've been beating expectations, but overall sentiment for the economy is still quite bearish. Speaking of economy, let's look at GDP for Q1. You can see here it came in at 1.1% compared to the 2% forecast, so we're lower than expectations. Price index for GDP was better than expectations. But really, the big number here is GDP for Q1. This will continue to get revised. This is the preliminary number here, but it's definitely not what you would want to see. Pending home sales also dropped quite a lot, way worse than expectations here. Forecast was 0.5% growth, and what we actually got was minus 5.2%. So huge step down in pending home sales, which is interesting because we have seen some strength in the housing sector, and this is definitely showing some weakness. I also forgot to highlight here initial jobless claims, much better than expectations, 230,000 compared to 248 expected. And looking at tomorrow here, we have core PCE coming out at 830, 0.3% expectations, year-over-year number 4.5%. Then we have headline numbers here at 0.3% also. So we get one more inflation expectation here before the Fed meeting next week. But we're pretty much a lock at 25 basis points based on the percentages right now. Moving over to Max Payne for tomorrow, you can see there's just over 1.4 million options in the market. Put call ratio still quite high at 1.88. Max Payne down at 407. I think we're going to close much higher than that. 417, that's probably your upper limit for tomorrow. Certainly could see a 414 close. Anywhere here between 414 and 417 makes sense to me. 412, also an interesting number, right where pretty much all the puts expire worthless in tomorrow's session. So keep those numbers in mind as we get close to the close tomorrow. Moving over to the charts here, starting with the S&P 500 here on the hourly and the daily, you can see we went straight up today, pretty aggressive. We got the earnings last night, super aggressive, rallied up, continued higher, rallying here after hours based on Amazon earnings. And you can see we're right back into this previous consolidation. We're not breaking out above any highs here on the SPY, but big green day, took out quite a few levels, crossed that 410.54 level I was watching. Next level is that previous high here at 414.69. If we get above that level, 418.12 is my next level. And then if we get above there, then 421.85 is a possibility. Looking at RSI though, if we do come into this daily SMA and we break down from there, that would be interesting. This could absolutely still be a fake out, so you kind of have to be cautious here. We got the breakdown, super aggressive pullback, stopping out all of the shorts. And then if this breaks down here, then we're going to be in a very tough situation. So do keep that in mind, but you do have to trade this to the bullish side based on everything we've seen and the super strong earnings. Moving over to the equal weighted S&P 500 compared to the SPY. I don't usually talk about this ratio here, but this divergence is quite aggressive, so I just want to highlight it here. The SPYs in this previous consolidation took out both of the previous days of downward movement as well as most of Monday here. And when you compare that to what we're seeing on the equal weighted ETF, you can see we took out that first day and then we took out about half of the next day. We're not even close to that Monday here. So we are above 142.50, but we're not at that 145.08, which is basically the center of this previous consolidation. We're below VWAP, still below the 21.9 and 55 EMAs. And really, this still looks quite bearish on the equal weighted ETF, again indicating that big tech is really propping up the SPY as well as the NASDAQ. Moving over to the NASDAQ here, not much has changed from the SPY. We talked about this yesterday being a bullish setup where we had the low, higher low from Tuesday to Wednesday, which was an inside day on the daily chart, which again is a reversal pattern, looked like a bullish setup. And then the strong earnings here today, everything went pretty much as planned, went super bullish, ended up closing super high, took out multiple levels of resistance that I was watching, just like butter, continued up higher. And at this point, we're very close to these previous highs, sitting at 321.82. If we get above that level, there's a lot of blue skies to the upside, in my opinion. So I'll be watching this one closely. Momentum, step towards bullish. And obviously, all of the smaller time frames are going to be bullish momentum, bullish RSI, super overbought. Everything was super strong here today for the NASDAQ. Moving over to the Russell and the Dow, you can see the Russell even had a bit of a bullish day, took out yesterday's down move, cut into some of Tuesday's, but still in a downtrend, still well below the 21 EMA here on the 4-hour chart, looking at 174.38 as my next level of resistance. If that breaks, basically watching 176 up here. And if we don't hold above this current level, then I think we'll probably break down to 170.35. So overall, still bearish on the Russell, but it did have a pretty strong day. Looking at the Dow, huge rally, just like everything else, back into this previous consolidation, watching 339.11 to the upside. If we take that out, then I'm watching 341.13, which is the high from these wicks. Moving over to Apple and Tesla. Apple had a big green day, hit resistance, probably going to hold in this zone. I believe their earnings is next week or the week after here, so they might hold up in this zone until we get to their earnings and then we'll find out. But it would make sense that they're going to go higher on earnings as lots of big tech continues to do. We also have the FOMC next week, which we do have to pay attention to. Tesla, on the other hand, got a reversal of the previous day, so now you have some reversal legs. See if we can get a pullback up to 167.34. That would be interesting. But overall, I'm still watching this as a downtrend, in my opinion. Moving over to Microsoft and NVIDIA, you can see Microsoft continuing higher here, taking out the August highs. Everything's super bullish on Microsoft. They posted strong earnings and they continue to rally. NVIDIA, on the other hand, has been stuck in this range for about a month now, a little bit more than a month. 262 to the downside and 280 to the upside. And with Intel coming in flat, I would generally expect this to stay somewhat flat, if not pull back a little bit. Moving over to Amazon and Meta, basically the same chart here. Rocket ships to the moon based on extremely strong earnings. Amazon rallied like everything else, hit about 110 and then went straight up to about 122.50, pulled back a little bit here, and now we're just under 120, but still very bullish here on Amazon. Super overbought, but strong earnings can definitely do that. Meta, on the other hand, same thesis, 209 all the way up to 239 in just a day and a half. So super bullish. Everything here on both of these charts says we're going higher. Moving over to consumer staples and discretionary here, you can see staples rallied, took out all the highs here in terms of a closing basis. Still looking at 77.50 to the upside here. Momentum turning back to bullish, certainly could get there in the next day. Discretionary, on the other hand, same thesis with Amazon, was falling, looked like it broke down, rallied with everything else right to resistance, and then on earnings we broke out super bullish here, well above my supply zone, so that is no longer valid. And now we have to look up to 153.90 based on this move. So a bit of a fake out, took out some of these levels, overthrew it, and now we're breaking out. So discretionary looking much better than expectations, primarily due to Amazon. Moving over to transports here, we talked about this one pretty much falling off a cliff, and it continues to do so. So we had a big gap, two big bear legs, did not take out all of yesterday's move. So this is still bearish, still well below the 9 EMA and VWAP on the 12-hour chart, and still below all the EMAs and SMAs on the daily chart. Momentum bearish, RSI still bearish on the weekly chart. Overall, this still looks weak, and we do have to be cautious here as we see the markets basically making new highs, if not making new highs, with transports still very weak. So definitely some divergence when you look across the major sectors. Moving over to semis, you can see we made a new low, rocketed up, hit resistance here on the hourly chart. Daily chart still inside day compared to Tuesday, so this could go either way still. Does look like we're going to get a bit of a pullback to the 9 EMA, sitting at 247.23. We also have 248.10 as a horizontal level of resistance there. So now at this point, we have a head and shoulders breakdown. If we come back up here, retest, and then fail, that's going to be super bearish on semis. So probably a short-term pullback in my opinion, and then we get the bigger breakdown over the next week or two. Moving over to breadth for the 20, 50, and 200-day averages, we did get a pullback, which makes sense. Everything rallied, but I want you to look at just how far we pulled back. So on the 20-day average, we're back to the 55 EMA, nowhere near these previous highs, which is where the SPY is trading right now. So again, reiterating what we saw on the equal weighted versus the SPY, the stocks participating in this rally is super weak. Same on the 50-day average, couldn't take out the last 2 days like we did in the SPY, getting back to these previous highs. We're just not there. And on the 200-day average, it's actually the weakest. Just managed to take out all of the price action from yesterday. So still well below the 2 previous days. Definitely not at resistance yet. It's not to say that we couldn't get a continuation and we pull all the way back here and we continue and break out. Absolutely possible. Anything is possible. But it's definitely interesting to see how few stocks are participating in this most recent rally. Moving over to the dollar on the hour and the daily chart, you can see we made a higher low versus that previous wick that we saw. 101.25 continues to hold. Wick to resistance, broke down, still holding the zone. At this point, it seems like we might hold here until we get the Fed comments next week. RSI on the daily chart slowly ticking towards bullish, but we're really just wedging up here, and until we break out from this level, seems like we're kind of holding right at this 101.25 level. Moving over here to JNK, we got a doji on the day, which is pretty crazy. You can see we gapped up, rallied aggressively, hit resistance, broke down super aggressively into the close. Big bearish volume at that level. And then look at that candle. Absolutely no movement from open to close. And momentum is bearish and RSI still showing bearishness. So definitely interesting to see this kind of a move on a day where the market's rallied super aggressively. Basically, we're getting no confirmation here from JNK. Moving over to TLT, got another sell-off here today, gap down, fell, very similar to this type move. Probably going to get a little bit of consolidation at this level of support, and then we get another rally. That would be interesting. Right now, TLT is basically untradeable, just continues to jump around like crazy, gaps everywhere on the daily chart. It's really hard to come up with a decent tradable idea. Like I said, certainly a level of support, but momentum is bearish, and you could absolutely break down further here. Moving over to the VIX and the VVIX, you can see we're basically doing the same thing at this point. So we topped out, both are falling super aggressively, getting back into this previous consolidation. Same thing here on the VIX. So overall, big pullback, momentum, bearish, and both of these look like they're going lower in tomorrow's session. We are at a level of support, so we could bounce from here, but you do have to trade what you have, which is a big down move with an expectation that this is going to continue in tomorrow's session. Moving over to my accounts here, I did fairly well. I flipped to bullish as soon as the market broke above the 316 level. Once that broke higher, then I assumed that we were going higher. And I put on tons and tons of puts throughout the day, rolled them up, rolled them out, everything I could do to get more credits on the put side, sold all of those, and most of them are going to expire worthless here. So you can see 315s, 316s, 319s, and these were all rolled up throughout the day. All those have expired worthless now. It's worth noting that the Qs are falling a little bit after hours. So we closed at 320.35, went all the way up to 322.50 or so. Now we're back down to 319.60. So that's interesting. Doesn't mean that we're going to fall tomorrow, and honestly, we'll probably stay bullish in tomorrow's session based on the earnings, but it is something to pay attention to. Looking at tomorrow's session, I actually have some pretty high puts already. I have some 317s and 318s. I might look to take those off early in the session based on what we're seeing in the after hours, but we'll watch the price action early in the morning to see what happens. I also did put on some 324 calls, which are in a small loss here, 2 of those at 44 cents each. Those will probably be in a good spot for tomorrow's expiration, but overall neutral to bullish. And then on my IRA position, I have some 312s. Those are going to expire worthless tomorrow. There's not much I can do about it. I don't have enough money to put on anything besides 312s. That's the highest that I can go. But if the Qs start to come down a little bit, maybe I'll roll these out in time for a small credit. We'll see what happens. Let me know what you thought of all of the earnings that have come out this week. It's been super crazy. Big tech leading the way higher and higher. And basically none of the rest of the stocks are participating in those rallies. So let me know what you think about it. And let me know your prediction for the inflation report tomorrow morning. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Definitely check out the Patreon as well as the Twitter. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.